Dear clients, welcome to PhillipCapital's Weekly Market Watch. I'm Colin, Analyst from Phillip Securities Research. Today, I will share with you on Monte Pacific Limited. Monte Pacific is a leading producer and distributor of quality branded food and beverage products. It has exclusive rights to the Monte trademarks for packaged products in the US, South America, and parts of Asia, which include the Philippines, Indian subcontinent, and Myanmar. It also owns global rights to the S&W brand, excluding Australia and New Zealand. The company operates one of the world's largest fully integrated operations with its pineapple plantation, cannery, and integrated seaport in southern Philippines. Recently, the company has acquired Del Monte Foods in the US for $2.3 billion, transforming it into a global F&B company with a five-fold increase in sales. Do note that Del Monte Pacific is not affiliated with other Del Monte companies worldwide. Del Monte Pacific enjoys strong growth on domestic markets in the Philippines, with sales contributing a major portion of its current revenue. Del Monte is a strong household brand in the Philippines with over 88 years history. Competitive advantages include dominant market shares in the Philippines, a wide distribution network, cost efficiency from its fully integrated operations, and sustained marketing efforts to drive sales. On the S&W brand, the company has expanded its business segment, having sales grown more than 4 times since acquiring the brand name in 2007. Del Monte Pacific sells fresh pineapples and processed food and beverage products under the S&W brand in Asia and the Middle East, with key markets in China and South Korea. We are positive on strong sales growth coming from China, Japan, and South Korea, as well as the Middle East. With the acquisition of the US Del Monte business, Del Monte Pacific will have access to a $7 billion market for packaged fruit and vegetables, as well as a portfolio of premium brands, which comprises of Del Monte, S&W, Cortadina, and College Inn. The acquisition also offers growth opportunities to expand its business in the US beverage market, worth $50 billion, and in South America. The company will also benefit from synergies from the acquisition. To sum it up, the key investment merits for the company are: first, strong equity brands which allows premium pricing against its competitors. Second, leading market shares in the US and in the Philippines. Third, a globally competitive pineapple producer, allowing it to provide high-quality pineapples at low cost. Fourth, an experienced management team with combined experience of over 200 years in the consumer goods industry. Some of the key growth drivers will come from a shift from selling juice concentrates to selling more profitable canned juice drinks, as well as strong sales in Asia and the Middle East. Del Monte Pacific also has long-term growth potential from its joint venture in India and from possible venture into South America markets. Key risks relating to the acquisition to consider would include execution risks, competition in the US, and financial risks due to the heavy financing for the $1.68 billion acquisition. On a positive note, we believe the company has the means and resources to well manage the risks. Adjusting for post-acquisition effects, the shares are currently traded close to 16 times price over forward earnings valuation, below its peers average. We like the company for its investment merits and below fair value valuation. We initiate coverage with a buy recommendation with a target price of 82 cents per share. For more details, please log on to Poems and refer to our initiation report on Del Monte Pacific. Now for the Q&A section. We have a question from Ms. Alicia Wang on whether to buy, sell, or hold to Del Monte Pacific shares at the moment. Our target price implies a potential 30% upside from current share price, taking into consideration possible dilution from future equity financing, and is based on a 12 months outlook. To reiterate, we recommend a buy rating for the shares. We would like to advise investors to do take note of the potential rights offerings that will pose share dilution risks. Another key thing to note will be the preference shares and their dividend rate. For more information, please log on to Poems and refer to our report on the company dated 20th March 2014. That is all that we have for you today. Want to win a pair of tickets to our Poems 2Q14 Outlook seminar worth $50? Look out for Friday's weekly market watch topic on PhillipCapital's Facebook page and post a question that you would like our analysts or dealers to answer. The top 3 questions will win a pair of tickets to the Poems 2Q14 Outlook seminar, which will be held on 5th of April. Please submit your questions by 10 a.m. on Friday, 28th March 2014. Thank you for watching today's Market Watch, and tune in on 28th March evening to see whether your questions were picked.